Welcome back to Bitcoin Season 2. I'm Charlie Spears. Bitcoin Season 2 is about new faces and new topics on the oldest blockchain, Bitcoin. We do episodes live stream like today on Mondays, a VOD, normal podcast episode on Wednesdays, and on Fridays, we have Writer's Room where Colin and I talk about interesting topics. We shoot the shit about stuff in Bitcoin, but right now, Bitcoin is screaming. We are up over 100,000. In fact, I'm going to look at my chart. Holy smokes, 107, closing at $108,000 on this beautiful Monday morning. But what is happening? Because right now, the price is up. At this point in historical bull markets, we should be seeing crazy amount of on-chain activity. And yet we see on-chain activity on Bitcoin at very, very negligible compared to where it was a year ago this time. Then now that we have a Bitcoin ecosystem of assets on top of Bitcoin, we're not seeing a whole lot of activity in those markets either. In fact, a lot of these secondary markets for Bitcoin denominated assets like Ordinals and Runes are down in Bitcoin terms. Where is this coming from? Stay tuned and I'll get into it. Bitcoin Season 2 is brought to you by Botanix. Botanix Labs is pioneering a new direction for DeFi with the first EVM L2 running on Bitcoin that's built to be forward secure, decentralized, and share gas fees generated by the network with users. See the future of DeFi at Botanix, botanixlabs.xyz. Yeah, so if you're listening to this, I'm going to apologize. This is going to be a very visual and charts heavy episode. I'll try to describe what I'm looking at, but I'm going to be pulling out a lot of the charts. Every live stream, every Monday, one of these like roundup things, I usually hit the metrics and I talk about interesting things I'm seeing. I'll usually pull up a few Dune dashboards, the Genie data dashboards, but today is a very dashboard centric episode. So again, as I said, Bitcoin, $100,000 now, strongly above that at 107K. And yet the numbers of stuff in Bitcoin are not that impressive comparatively. Think about this. We are 40 to 50% over our previous all-time high of $69,000 per Bitcoin. Historically, we should see the markets roaring for Bitcoin ecosystem type behavior. Yet here we are. Let's start out by looking at the Bitcoin dominance chart. If you're not familiar with Bitcoin dominance is, basically you take the overall market capitalization of all other cryptocurrencies and we say we're going to chart how Bitcoin compares stacked up to all the other crypto combined. And what we saw was, zooming really far out, basically 2017 here, we saw Ethereum pop up onto the scene and it created this like explosion of different other L1s and other types of fungible tokens in the crypto ecosystem. And so Bitcoin as a share of overall crypto market cap plummeted from 95% down to 35% as an all-time low in 2018. Then as the entire crypto market pulled back, Bitcoin inched upwards, hitting a most recent high of 74% dominance across the entire crypto ecosystem in 19. That was the bottom of that market. Then we saw last cycle 20 through 22, other layer ones like Solana and yes, Cardano and whatever have you come in and eat away at Bitcoin's market dominance, hitting a bottom of 37% back in September of 2022. But since then, we have seen 2 full years of Bitcoin's dominance across the entire crypto market cap grind upwards in the most like steady grind upwards, following this line. Again, I'm not doing TI, I'm just drawing this line just to show you. So now we are at 60% or so. Right now we're down a little bit to 57%. And that just tells the story of the energy coming back into the Bitcoin ecosystem. When historically we would see by this time in the market in a bull market, we would see Bitcoin's dominance begin to decline, yet it continues to inch upwards. We wrote a piece on this back in last week on Bitcoin's dominance, where I basically made the point that dominance may not fully even tell the whole story because this doesn't take into account other Bitcoin demand, specifically like Microstrategy. Let me pull up the chart. Something like Microstrategy, where here we have Microstrategy actually carries a premium over its Bitcoin denomination, a premium of about 2.5 times the value of Bitcoin on its balance sheet. And just accounting for that would add about 0.7%, or you might say 770 basis points, 500 basis points, whatever. 0.7% to the overall Bitcoin dominance. And so there's we have these other demand for Bitcoin assets, and also Bitcoin dominance takes into account stablecoins. So do we think stablecoins should be a part of this dominance indicator? I think they're less useful than they used to be. So all eyes on that. So with the context of Bitcoin dominance rising, Bitcoin at $107, almost $108,000 now, why is on-chain activity low? Here's mempool.space. Right now, transaction fees are 7 to 11 sats per VByte, which means it's going to be between $1 and $1.50 USD to send a normal transaction to be included in the next 1 or 2 blocks. So historically, we've seen by the time we're at 2 times over Bitcoin's previous all-time high, we've seen these numbers be much higher. Look at this. In 2021, when Bitcoin was 3 times over its all-time high at $60-some-odd thousand in early 2021, we saw fees at 80 to 90 sats per VByte. Given that we're only at, say, 50% over the previous all-time high, that would be, say, January, and that's looking at about double where the current fee rates are today. And this is interesting because, theoretically, we would expect Bitcoin on a long timeline to have more fees on average each cycle as Bitcoin transitions to more of a fee-based mining revenue model. Yet this is still kind of not right now. It doesn't seem to be playing out a ton. Let's just look at the numbers for Ordinals. We have 73.6 million inscriptions to date. 80% to 90% of those are BRC20s. And here we have the total inscriptions to date. They have increased pretty significantly after they fell off a cliff when Runes launched at the halving. So now we're getting 100 to 120,000 inscriptions per day, with an monthly average of 85,000 for the past 30 days. And this is, again, mostly BRC20s, which have experienced a resurgence in China, particularly. Total fees spent on BRC20s is 191 million. All-time fees for inscriptions is 278 million. Still $250 million towards BRC20s, and yet, the inscription fee spin is kind of smoothed out a little bit. Now it kind of fell off a cliff as we expected toward right at the halving, and has been basically anemic for half a year. Over the past 30 days, though, we've seen daily inscription fee spend tick up to $150,000 to $300,000 per day. So we've seen some increase in that. Let's take a look at Domo's marketplace dashboard. Let's just see what the volumes are doing here. It's a couple days old, but you can get the idea. We crossed over 5 billion in total trading volume across all secondary markets. This is just Ordinals inscriptions, not including Runes. Marketplace volume has ticked up a little bit. It was at kind of an all-time low in August and September, seeing only sometimes less than $1 million per day of volume, sometimes $500,000 per volume. And now we're at anywhere from $5 to $10 million per day in volume. It's being pretty much dominated now by Magic Eden and OKX. Magic Eden right now being a little over half of the volume for trading these assets. I will, caution a little bit because this is kind of a common, like a little bit of an open secret that a lot of the volume on OKX, which is not on-chain volume, is probably wash trading. So I don't like to make that claim, but there's multiple sources which have suggested this is true, and we don't know exactly how much of that is wash trading, but it is a non-negligible amount. So we do have to be, mindful of some of the numbers from OKX. And we are seeing net new users continue to grind upwards, maybe a couple thousand of new users per day. Let's take a look at Liquidium. Liquidium's weekly volume, according to this dashboard from Shudu, Liquidium's weekly volume has been increasing since it bottomed out in September. Liquidium is a lending platform, kind of like the lending platform for Ordinals, BRC20s, and Runes. And right now we see over half the volume on average per week is going to be Runes based. 61 Bitcoin in Runes lending volume, 35 in Ordinals. This is still down from its all-time high in April of this past spring. But yet we are seeing a very strong trend here from the bottom in September. Let's go look at Poshi's Runes data, where we have daily Runes, new Runes on-chain volume. Here we have Runes basically flat and almost dead through the summer, and now increasing in October through December. And he has this great chart here, which has daily exchange volume percentage, which indicates that the market is about 50-50 Magic Eden and OKX. Again, as I said, though, OKX's numbers are difficult to get a real number because of wash trading. So certainly Magic Eden is a higher percentage of this overall number on this chart. But we do see an interesting story developing, which is, at least according to stated trading volume, these two markets are about neck in neck. That said, I just kind of some numbers here. We're not really seeing the explosion in on-chain trading, nor are we seeing the explosion in net new fee activities on Bitcoin. We've seen a little bit of resurgence in the market and a little recovery, but it hasn't been this kind of mania that a lot of people have predicted. Now, the other side of this is, well, perhaps the market's gotten more efficient. And this is certainly this is a believable, compelling case. Maybe the market is less bad at burning money to inscribe new things on chain. Now, we certainly saw a lot of fee overpayments in December and January of last year as mainly an Asian-driven fungible token speculation mania kicked off and created crazy high fees on Bitcoin. Again, this time last year. But now we're seeing, volume recover, and we're not seeing as much of an impact on chain. In fact, as I said at the top, on-chain volume remains to be kind of de minimis. That said, let's look at this. In the past 30 days, on Magic Eden, we've seen the floor prices for many of these top collections: Puppets, Node Monks, OMB, Cats, Pizza Ninjas, Frogs. The floor prices of most of these are up a little bit. It's a little bit across the board. You see Frogs and Puppets are down 15% from where they were a month ago, but your other collections, Node Monks, OMB, Runestone, Quantum Cats, all up anywhere from 1 to 15%. Now, this is down from their all-time highs in Bitcoin denominated terms from spring of 2024, earlier this year. But I mean, let's just look at the quantum cats chart. So I think it may help because quantum cats peaked at like 0.4 BTC in April of this past year. And now they're at 0.21 BTC. In dollar denominated terms, this is actually roughly flat because in April of this past year, we were sitting at $60,000 per Bitcoin. So at 60,000 at 0.4 is going to be roughly the same price as 0.21 at $110,000. So what's interesting is that we're seeing a lot of these collections, like Quantum Cats, retain their pricing power in US dollar terms while Bitcoin goes up and while their Bitcoin denominated price goes down. So this is an interesting observation. Like, so you, the listener, I ask, are these secondary assets, these luxury JPEG, these luxury assets, which are NFTs on Bitcoin, are these really, do these have more of a static US dollar value? How do you measure whether you have a successful value in, well, how do you measure like success? Do you think that you've been successful if the US dollar value of your inscription has gone up, or do you wish that you had kept in Bitcoin? These are more rhetorical questions that I ask, and that I want to try to bring some like context to the market for you, the user. Let's go back to some more charts. This is a chart from Merch on Bitcoin transaction fees and transaction type across the whole ecosystem. This chart shows the transactions by percentage. So it takes like normal financial transactions on Bitcoin as regular transactions, runes transactions, and inscription transactions, and BRC20 transactions, and says of all the transactions per day on Bitcoin, how do they break down? And what we've seen is really since March 20th, over half the transactions on Bitcoin have been runes transactions, as you can see here from the green. We're talking like not just 50%, but often sometimes 70 to 80% of all transactions on Bitcoin in a day are runes transactions. In the past couple of weeks, we've seen BRC20s again catch a bid and actually on a couple days surpass runes transactions. For example, like on the 28th of November, 46% of transactions on Bitcoin were BRC20s and 3% were runes. So what we're seeing is, even though like Bitcoin continues to be adopted by corporations and put on, balance sheets like Microstrategy or some of these Bitcoin miners like Marathon or Riot, who are now hoovering up Bitcoin left and right, issuing convertible bonds or notes or however, I don't know what you call them. On chain, we are seeing these custodians have virtually no footprint and virtually no impact on chain. In fact, we're just seeing that there's like now a divergence between what I would say Bitcoin holders and active Bitcoin users, where the active Bitcoin users are now the majority of like the activity and interesting things happening in the Bitcoin economy, whereas the like custodian, corporatized balance sheet Bitcoin, the MicroStrategy Bitcoin, is kind of just being sequestered away and held among kind of like gold on a balance sheet. And this is a really interesting phenomenon because I don't think we've seen something quite like this in a previous cycle, where you have such a divergence among the entire Bitcoin asset class. For Bitcoin users who use it as a kind of platform, maybe an issuance platform for their fungible tokens or their JPEGs or whatever kind of ecosystem DeFi shenanigans you want to pull, versus the like Bitcoin as a savings or kind of balance sheet, like pristine balance sheet assets. So this is a really interesting phenomenon to observe right now, because Bitcoin is now well into a bull market. We're at $100,000. It shows no signs of stopping. And we have now multiple different Bitcoin ecosystems which don't interact with each other currently. That said, the last kind of like Bitcoin ecosystem and trend that I want to watch, and I've brought it up here on this podcast a few times before, is the trend of Bitcoin staking. So I will pull up Bitcoin Layers' dashboard. Shout out to our friends at Bitcoin Layers. They are tracking like the amount of Bitcoin that is staked. Now, if this is surprising to you, well, I thought Bitcoin is proof of work. Well, yes, Bitcoin itself is proof of work, but there is a trend right now to take Bitcoin, lock it up, and use it as an asset to stake other blockchains. The main project that is doing this is called Babylon. I had an interview with David Say of Babylon Chain this past summer on the podcast. I recommend you go and watch it again. Babylon from August, previous episode on Bitcoin Season 2. So we're seeing now Bitcoin deposits increase. We saw 1,000 added Bitcoin staked last summer, another 22,000 in November, and recently another 20 and 30,000 for a total of 56,000 Bitcoin staked on Babylon. This is interesting because this makes Babylon a larger holder of Bitcoin than Riot Blockchain, one of the largest mining companies who's been hoovering up Bitcoin. It makes it larger, I believe, than Marathon Digital, another public mining company who's like got the largest Bitcoin balance sheet, or maybe HUD, I forget. But what we're seeing is, if I were to kind of hand wave and identify this trend, and a point I made in our previous newsletter is that technically Babylon is adding more Bitcoin to its staking protocol. It's adding Bitcoin at a faster rate to its staking protocol than MicroStrategy was early on. So this is very interesting because this represents a material trend now. 50,000 Bitcoin. This is multiple billion in dollars in Bitcoin staked through this protocol, and there seems to be significant demand. It's $6 billion worth of TVL. So this is a really interesting phenomenon that we're seeing. We have, I would say, the corporatized Bitcoin, the staked semi-custodianed Bitcoin, and the on-chain Bitcoin user behavior. These are now three major different ecosystems which don't have as much interaction with each other as you might expect. So, that said, I think this is one of the most interesting divergences happening in the overall Bitcoin ecosystem, and that's why Bitcoin is getting kind of weird. I titled this episode on our Twitter stream, "The Bitcoin Eco is Getting Weird at 100K." That's because it is getting weird. Like, Bitcoin is starting to have many different faces to it rather than just the face of your Michael Saylor bulltard boomer. Now you have a bunch of different actors all interacting with Bitcoin and using it for very different things now. So as always, I'm going to try to cover this stuff for you under Bitcoin Season 2. Thanks for hanging with me during this very metrics and visual heavy episode. If you listen to it, thanks for trudging through. I would recommend you go look at the live stream so you can visualize it. Otherwise, make sure to subscribe to the Blockspace newsletter.blockspace media or blockspace.media as the primary website. And hop in our Telegram chat. Yes, we have a Telegram chat. Hit me up if you want to be invited to it. I will be adding people. We'll be doing some deeper dives on Bitcoin analytics and stuff happening on chain in there. Otherwise, I will see you all.